Hello everybody, today we're going to be looking at Mach Trend Platinum Pro, which is a very robust low frequency trend following system I developed, and I tested it on 250 different markets, and the initial results showed 83% of those markets were profitable. So I was very pleased with the robustness. So I'm going to show you how it works, starting off with the standard length 50, and this is the Nasdaq futures, and this is just a minute chart, and we've got an entry here 21443 which exited at 21707, and you can see there's a lot of noise in the middle here, which was horrible price action, which was when the US market opened. But it went all the way through that in a long trade, and it didn't reverse. So basically the reason is that once it starts and it's identified the trend is good, it will not get out of this trade until there's evidence. So here there's evidence the trade's going wrong, but these little movements, they're not serious enough for it to change its mind. So here you can see this is when it's bad. It's flat and it's deciding to go long. Set to long only mode here. This is a range bound market, and during this type of market trend following systems lose money, and Mach Trend also would lose money as well. The point is that usually a market will decide to make a trend, and sometimes this trend is pretty ugly, like here. This is ugly. It's come all the way back, but yet the thing has not reversed. Stayed long, now it's got out there. So you can speed it up by shortening the length, and you can slow it down by increasing the length. So we are set. I've got delay set to 4, trade long 1, trade short is 0. Trade short is 0 because I prefer to use it this way. It's just my preference. So basically pick a bunch of markets which are strong and pick a bunch of markets which are weak. Trade the weak markets on the short side and the strong markets on the long side, rather than trying to get long and short on both on one market. It's a much simpler way to trade. Get rid of this mess. Okay. So that's loaded, and you can see it's much quicker because I've shortened the length. So here's an ugly uptrend which it stayed in. There's another very ugly trend. It stayed long. That was a very unfortunate exit. And on this setting there will be an awful lot of trades. So this is the strategy performance report from the 1 minute Nasdaq, which surprisingly does quite well. It's normally inadvisable to use it in this time frame, but this is just to show everybody. The problem with the 1 minute is the number of trades. So here there's 33,000 trades and 238,000 profit. So unless you're getting a very good deal on commission, this would be nothing like as good. But the point is to demonstrate the robustness of the strategy. Since 2016 this has been pretty much up and up and up. So now I'm going to go back to a more favourable setting, because this is a bit too quick. Switch it off. Let's go back to 5, and this time we'll go to 55. I'm going to turn that on, and then I'm going to change the time frame to 2 minutes, and just wait for a moment for that to load. So this is a good example of the strengths. There's also a good example of its weaknesses. So here are the weaknesses. Went long, lovely move up. If you were quicker you could have got out somewhere here or there, but because it's going for a big move, it's not interested in getting out. little profits. It's looking for a big move. So this trade was profitable, but not very much. And then we got whipsaw. The one that's interesting is this long trade here. It waited a long time for the trend to actually, the long trends to wave goodbye and say we are now a short trend. So this is a losing trade, but there hasn't been any whipsaw. A really quick system might have been closing the long here and then short and then gone long again, short again, and it would have traded all this long short, long short, long short. But this strategy in the settings just completely ignored all this noise, and it didn't enter again until it is back here. So this is quite impossible to achieve with most systems. They don't do this. You'd have all these trades down here giving you big losses. Okay, some of them would be big wins, but they're short-lived upward moves, sort of as you would expect when the market takes a downward move. And then when the trend is decided that it's up again, the system steps in and it just sits there with a big long trade for a long time, and again it's ridden through all this volatility, stayed long and got out of it here. It's okay, the price went up later, but not a lot. Just look at the strategy performance report on the 2 minutes. There'll be less trades, but there's still a large amount of years. Okay, so now we've got 7,640 trades, which is a lot less than the 33,000 we had on the 1 minute chart. So quite a big difference, plus I've slowed the settings down. Again we've got profits 284k, sorry, let's close that, and there's no short trades because it's set to long only. So 32, nearly 33% profitable, which is on the low side, but because the risk reward ratio is good, 2.25, you can get away with this win rate being low. So this is a strategy for someone who's got patience and, you know, the attitude of a proper trader. Can't really put it any other way. You've got to be prepared for volatility and learn how to deal with it if you want to do well with this strategy. If you're a scalper, day trader, no, it's not going to work for you. You're not going to like it. Don't bother. So now we can shift time frames again. It's 3 minutes. So on the 3 minute chart, the number of trades was dropped to 5,000, and that's in about 9 years, which is much more orderly. The win rate is very similar, slightly less. Risk reward ratio is very similar, slightly more. But the point is that it's still profitable, and the equity curve, although it's got some large drawdowns, it is tending to go up. And I'm going to jump through to longer time frames, 5 minutes. So now we're on a 5 minute chart. You can see some nice long trades. One was shaken out. There's another one which is quite typical. It waits a long time before it decides to get out, but at least it didn't give all the money back here. And this is what gives it this very high risk reward ratio. Another one. This is kind of very typical how it behaves. With this strategy, as with the other trend following products on my site, the key, one of the most important, not the most important, but one of the very important things is to spend time on market selection, and not just market selection but time frame selection. And this comes from experience of looking and looking and looking at thousands of charts or making algorithms so you can find a good price action. So here, for example, that's good price action, and this is bad price action. And you can sometimes find markets that are in this mode of trend for a long time versus modes where they're cycling or ranging. Now we're going to be looking at the settings, and we've got the paint bar study on, which is why the bars are highlighted. So this is the indicator, and if you want to remove them, show paint bars, just change that to a 0 and that will disappear, leaving you with the indicator only, which is this line. So if you want to make this work slower, obviously the length is the first thing to look at. So if we go with a length 100, I'll just type 700. So we go for length 100 and then apply. So we can see it went long here and it stayed long all the way off the page until here, as opposed to this one. This is the same date range I've got. So this one is length 50. We had a few long, short and long, and if we change this to make this faster, so we can go for very fast, say for example 15, switch it on. These are both on 15-minute Nasdaq, so you can see it's much faster, and it tracks the price action when the price action is serious. Basic cornerstone of the logic behind this strategy is that it doesn't take any notice of small moves. You know, the trend has to be changing direction before it changes its position, and this is why it's capable of getting these extreme large winning trades, which can go on and on and on. Frequently you'll get one trade which completely dwarfs all the other profits with this strategy. So that's the length function. Now we're going to look at some of the other functions. The next feature we'll be looking at here is delay. Now this is set to 6, and on the other one we've got 2. So I can imagine a lot of people wondering why there would be a delay built into a trading system. Surely one needs to jump on these things as quickly as possible, yes? Well, this is true providing there's really a fire to put out. In the stock market there's lots of fire alarms going off all the time without the actual being a danger of fire. This is like spoofing and false trading and failed breaks, institutional manipulation, which is designed to take all the money from the poor retail trader, who they see as retarded traders. And it's often the case, but it's not always the case. Some retail traders are very good. So you can see here there's a long trade entry, and the trade was closed here. And this is the same settings, length 30, and this one's got the delay set to 2. So it's moving quicker. So it went to put the fire out there, then it went to put the fire out again, put the fire out again, put the fire out again. So there's 4 trades here which didn't need to happen, and the delay set to 6 stopped these fake fires getting put out, which would have lost you a few ticks, plus the annoyance and distress. Okay, the next setting is called skew. So default setting for skew is 0, which means it's got an equal bias for trading long or short. So these two screenshots are identical apart from one thing, which is the skew. So this one's got the skew set to 0, and this one's got the skew set to -3. So a negative number means it will go long easier, and it will be harder for it to go short. So if you see the exit, sorry, let me just put that a bit more clearly. It will be harder for it to exit long or enter short. So if you had shorts enabled, this would be a short entry. So this is a 0 skew, and with a -3 skew, if you look at this little bit here, which is here, it didn't sell there, it sold later. So it's less willing to go short when you put in a -3, and the long trade is lower. So it's gone long easier at 74, whereas this long trade is at 40413. So the reason for that is to give you an edge if you are thoroughly convinced that one market is weak and you don't want to be going long unless there's a really good reason. Then you would put the skew as a plus number, and vice versa. If you thought the market was very bullish, like for perhaps this one, you'd put the skew as a negative number, so it wouldn't do so many short trades, and it would need much more of an excuse to put them on. Okay, the next thing is the 5% rule, which is frequently misunderstood by everyone. So I'm going to explain it once and for all. So 5% rule is 0. So just leave it at 0 and you'll be fine. Basically, the 5% rule was devised by option traders who were short in options. So for example, if you shorted an option at 100 and it goes down to 5p because of time decay, $5, 5 cents or whatever, the 5% rule means you would close out. So you've got 95% profit and there's a 5% risk left in it, but the bottom of a bear market can be extremely volatile, and letting it go to 0, which it could do, it may not, it may rally all the way up to 35 or 50 or 60, and that's probably the most annoying type of trade to be in when you previously had a short entered at 100 and it's gone down to 4 or 5 and it's rallied up to 60. It's really annoying, trust me. So as I was often trading stocks on the short side, I put in this feature, and of course I gave it to my customers to use. So if you put a 1 here and you trade some stock that's going bust and you sell it at 100, when it hits $5 or £5 or 5 pence, 95% less than it was, then it will exit short. That's it, that's all it does. So just leave it set to 0 if you're trading futures or forex. Normal markets, you're not going to see a 95% collapse. So if you've got any questions, hit me up with an email. In fact, this is a quick look on the FDax. The FDax has a bit more of a tendency for trends than the Nasdaq. They are somewhat cleaner and smoother, therefore I'd say it's slightly more suitable. This is a 5-minute chart, and I've also enabled short trades, so you can see the short trades going on, turning into long trades. And this is an always on system, always in the market until you switch it off. If we look at the strategy performance report, we've got 128k of short trade wins, and this time we've got 5,000 trades in about 6 years and a 2.58 risk reward ratio. So the win rate has dropped to 30.8%, but the risk reward ratio has gone up quite a lot to 2.58. This is the point. This is what the system's looking for. It's looking for the big winners. Once we entered the bull market for real in 2023, pretty much easy ride all the way up.